Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So 18 days into the new year, pretty clearly we are up substantially everywhere. A rising corn raises all scam coins. Some of these scam coins are outperforming BTC a little bit. I'm going to save alts for a separate video entirely, but just from a market cap perspective, everything doing extremely well so far. Slightly dipping below that key 200-day EMA for Bitcoin dominance, which we last saw March, April when EOS LTC sort of took off pre-Bitcoin. Now everything's sort of moving together. Alts are certainly gaining a little ground. Percentage-wise, a little bit on the dominance. There's no like ICOs being issued or anything, so I don't think we're going to see some massive 40% drops like we did in 2017, but it's looking good. Looking at the CME futures contracts and options contracts now, as I usually do. Again, these biannuals have just been on the money as far as determining the trend. We're up 25% from open on December 30th of the current biannual. So that leads me to believe this is probably going to be a bullish contract. If we were down 25%, I'd say it was bearish, but it's really been binary. It's really been up and down. It hasn't been both. This was a 200% run. These other runs were between negative 40 and negative 60. So, we don't have much to compare against historically as far as, an N of 4, what this average is going to be. This isn't pointing to anything specific, just pointing up. 200% would be like 22,000 or something. So it'll probably be less than that, but I think overall it's definitely an up contract. Anybody who bought bought futures for options before they opened, is sitting pretty as long as they're long, not short. And if we look at the other contracts, halving's coming up. A lot of people are talking about halving. More and more people are going to be talking about halving. It's going to be having this, having that. We may see halving even as early as late April. So it's not that far away. It's pretty close. These are all the other futures contracts, the long-dated contracts through Bitcoin halving. Not much volume on these overall, but they do exist. Then just taking a quick look at previous halvings. For the most part, we've sort of coasted through halving immediately as far as a price reaction. There isn't like a massive up movement or anything. I mean, surely in 2012, 2013, there was a nice up move pretty quickly afterwards. In the 2016 halving, the ramp sort of first beginning. This was the Bitfinex hack in August. It sort of was the spring for everything to come. So what I'm thinking for this halving is another ascending triangle type sort of consolidation accumulation period before things go crazy wacky. I think it's going to be bullish. It's just supply side stuff. So far it's been bullish. Volumes are a bit down though overall from 2019. We've yet to see like massive day after day uptick in volume. This is the BLX, so it's aggregates a bunch of exchanges. Looking at this down channel and futures premiums. So the turquoise is quarterly premium over spot, and the yellow is weekly premium over spot. And what I wanted to see last video, I said I wanted this to come down a little bit. This says that this is a cash-led rally. This isn't futures going haywire insanity. Like here, this is spot catching up to futures, catching up to quarterly. So spot is gaining ground percentage-wise on quarterly. So that's what I want to see if I'm bullish. I don't want to see this massive premium on quarterly immediately. I want to see spikes and troughs and whatever. But if I'm bullish, I don't want to see anything super bullish. I want to see it starting to get bullish, or even a divergence. There's a divergence here in the futures premium. I'd call it a bullish divergence because we're rising in price, dropping in premium. I don't know if that's accurate. We'll find out. But you don't want premiums massively high. You want premiums low initially, and then towards the end of the blow off craziness, premiums will go wacky like they did here. Looking at Bitfinex versus Coinbase. Again, historically, if Coinbase is leading, it's a cash-led rally. We're bullish over bearish. When the shenanigans with Tether and the problems with Bitfinex withdrawals were going on, that was bearish, clearly, looking back on it. But now as we enter this period of uptrendedness past this inverted head and shoulders, again, Coinbase leading Bitfinex. That could partially be because USDT has been unable to maintain a price above $1 for an extended period of time. And as we arguably go up against this rising wedge / bear div / parabola. To see USDT below $1 doesn't instill a lot of confidence in me that this is going to have massive continuation. Now, before I get all these comments in the video, this isn't a rising wedge or rising wedges break up. Yeah, okay, all that can be true. That's fine. This can go to infinity from here. But me personally, I can't open a massive position seeing this wedgy paraboliness with USDT below $1. Just historically, I want USDT above $1. There might be some shenanigans going on in China with the mining equipment and whatever devaluation of Tether. I don't know, but I want to see Tether above $1. I don't want to see a rising wedge. I don't want to see bear divs. Let's go to the weekly. Let's talk about some bullish things. Let's feel good. It's been a while since we felt this good. I think personally, sentiment-wise, it's pretty great overall, at least on CT, Crypto Twitter. We're above 50 on the weekly RSI, which is a litmus test, bullish, bearish. We're in bullish territory. We're above the 20 SMA on the weekly. Historically, that's been an insane signal going back to 2011, 2010. The moment we're above it, we stay above it. We kind of trend above it, and we bounce on it several times. When we're bullish, when we're bearish, when we flip one or the other, that's a really important place to watch, which is another reason why, besides being above the Kijun, above this volume zone, above the 50 on the weekly, still in the cloud, these are all more bullish than bearish things. It'd be better if the cloud was bullish completely and we were above the cloud and blah, blah, blah. But overall, this could look a lot worse than it does. If we would have dropped out of the cloud back in this grindy volume range, would not have been as bullish as it is now. I know that's like galaxy brain thinking, but just based on trend metrics, I'm just looking, we're above the Kijun, we're above the Tenkan on the weekly, we're still in the cloud on the weekly. It's kind of pointing to the 10K zone on the cloud. Otherwise, it would have been back to the 200 week EMA, whatever this is, around 6,100, something like that. But we're now above this heavy volume zone, which to me is more bullish than bearish. And we've got very little volume ahead of us. Historically, there hasn't been much volume above 9K. It just really hasn't been. Looking at the daily cloud, the 50 and the 200 on the daily, again, we're above this massive volume node at 7.9. We're above the yearly pivot, which is huge. That's huge. If I'm just trading pivots along the breakout at 9 or 8.1, whatever this was, when I just hold it to 13, 12, whatever it is, we're going to have pit stops at 10K. It's going to be some consolidation at 9.5, but overall, this looks good for 13. Now, cloud-wise, it's going to need some time. EMA-wise, it's going to need some time. It's going to go sideways for a little bit. But buying above 8.1 and expecting 13 isn't crazy. It's the previous local as well. So this isn't like rocket science, it's just looking at local highs, looking at local lows. That's probably where we're headed. Again, talking about litmus tests, the cloud has been, obviously, if you're watching this channel by now, you hopefully know my love affair with the cloud. But coupling it with the 200, we trend above the 200 above the cloud, or we trend below the 200 and below the cloud. There's really no in between for the most part. There's some wackiness here when we were down, whatever that was, 60%, I don't know. And we bounced, and this China stuff. But overall, we don't snake in and out of it. It's a decision trending metric. So we're above the cloud, above the 200 on the daily. Certainly bullish, especially leaning into halving. And just looking at the cloud, specifically the bullish cloud checklist, are we above the cloud? Yes. Bullish cloud, not yet. This is one reason, the biggest reason really why it's going to need more time. I think it's going to need 2 weeks minimum, 4 weeks maximum before we chop around between 8.4 and 9.1 and make a decision. As soon as we're above the cloud, that says look for longs. The probability of longs goes up massively as far as being winning trades. Again, we have this rising wedge parabola, like 45 plus degree angle up. The situation doesn't make me want to go long like at the top of this thing. There is a bit of a rising wedgy thing, I guess you could call it, on RSI. Just if you're like looking for stuff. There's no bear div though on RSI, which is one interesting point. There are bear divs on lower time frames, but not on daily. Distance from Kijun as well. Kijun's all the way down at 7.6. Pretty big divergence there. And lastly, for the cloud checklist, the lagging span is not above the cloud yet. So this has some time, definitely bullish, more bullish than it has been since July. So we're definitely looking good. Moving on to ETH, it probably is the best example currently of a parabola. It doesn't like come to a point or anything, but you can see how, we had this flatter stage and then just straight up stage. And it has a pretty good case for a rising wedge, probably better than BTC. Bear div on volume, bear div on RSI. RSI has been ramping up here, making higher lows. So, if that breaks, if this parabola breaks, it's going to 160 at least, maybe lower. But it certainly doesn't look like it's just going to keep going forever into infinity past 180 right now. I think there's a pretty strong case for reversal here versus BTC. They're both going to reverse, but I think ETH is going to reverse more. Again, talking about trend metrics above the 200 above the cloud. This is bullish, waiting on that cloud to flip. 2 to 4 weeks, it's going to happen. We're going to grind around below 200, probably between 160 and 200 for another 2 to 4 weeks and make a decision. But that decision is definitely leaning heavily bullish at this point. I think to get above 350, 400 zone, it's just going to be monumental effort. It's going to take some staking announcements. It's going to take something fundamentally, I think, to get past this local high of like 340, whatever it was. To see 420 blaze it again is going to take some massive bullish momentum. And then lastly, just looking at the yearly pivots with VPVR, you can see we're above the highest volume zone historically, where we had this ascending triangle consolidation, previous local bottom at 137. So that's hugely bullish. That says there's a bottom likely that's in, probably not going to break that zone anytime soon. Yearly pivots at 200, huge volume node at 200, another volume node at 300. So ETH really likes its psychological zones. It consolidated there before and broke down. So it's going to take some bullishness. I think the tank is running on E right now for the bulls as this parabola rising wedge comes to a rampy conclusion. And again, this can break up. People are going to say in the comments, these have broke up before. It's going to break up again. Method's going to go to infinity, whatever. But I think we're gonna stall out a little bit here. It's not to say I'm massively short. I'm just saying, hey, this is what I see. That's all I have for this one. Like, dislike, comment, share, subscribe. Hit me up on Twitter, and happy trading.